Rachel Papazoni is here with all the business news. Rachel, happy Monday. Now, how are the markets on the first day of trade on this new financial year?
Not so well, Kumi. It follows a poor showing for the last day of the financial year on Friday. Markets are down about 0.5%. Let's take a closer look at the figures. You can see the All Ordinaries and the ASX 200 both down there. Let's look at some of the movers. Fairfax has taken a dive, falling as much as 13% today as potential buyers back out of a multi-billion-dollar deal. Aveo continues its downward slide since being put under the spotlight last week, and Sigma Healthcare is down 3.5%. In positive territory though, Blackmores is trading up for the fourth straight session. Bega Cheese jumped to its highest level since February last year, and BlueScope Steel is doing well on the back of strong iron ore prices. Overseas and Asian markets are all up. The Nikkei is up on solid business sentiment and a stable US dollar to yen exchange rate. And to the US, markets ended the week slightly up. The S&P 500 up about 0.1%. Tech stocks, though, as you can see, were down. Let's check commodities, and gold is buying $1,237 an ounce. Tapas and West Texas crude both up slightly. And to the currencies, the Australian dollar is buying 76.72 US cents. Well, while capital city home prices lifted last month, the trend is still for slower growth. CoreLogic's monthly figures show a 1.8% surge in capital city prices over June. It more than erases May's 1.1% fall, but CoreLogic says both figures reflect a large degree of seasonality. The June quarter figures show an average capital city price rise of 0.8% over the past 3 months. That's the slowest quarterly rate of growth since December 2015. Well, to talk us through these findings, I'm joined in the studio by Cameron Kusher, Head of Research at CoreLogic. Cameron, thanks so much for joining us. Was this a surprise to see this increase for the month?
Not really. As the release said, that we do see this seasonality whereby values tend to fall in May and then rebound in June. I think the important thing is they haven't rebounded that substantially. As you said, we haven't seen a lot of growth over the quarter. It's the weakest quarterly growth since December of 2015. And really some of the heat does appear to be coming out of the Sydney and Melbourne housing markets finally.
What were some of the, best and worst performing states?
Well, the best performing states over the quarter, we saw areas like Melbourne, for example, 1.5% growth over the quarter. We also saw some positive growth in Perth for the first time in a long time. In terms of the weakest markets, Darwin continues to be the weakest markets. Values fell by more than 5% over the month. So you've got a very mixed market. But overall, Sydney and Melbourne are still the strongest, not as strong as they have been, and then most other capital cities seeing pretty moderate levels of growth.
What factors are keeping that growth moderate or even slower?
I think ultimately what we're seeing is the impact of the policy changes from APRA. We're seeing that investors are feeling the hit of higher interest rates, and that's starting to impact on the market. If you look at the housing finance data, investors make up about 55% of new housing demand in New South Wales, about 48% in Victoria. So if you target that investor segment, it's going to have an impact on the rate of growth, and we're starting to see that now.
And where do you think interest rates are going to go? Obviously, we'll hear some news on that tomorrow.
Our view is still very much that the Reserve Bank is going to hold interest rates on hold, but we wouldn't be surprised at all to see further increases in interest rates to investors over the coming months as lenders try to slow the level of lending to investors and interest-only lending. But in terms of the Reserve Bank, our view is pretty much on hold for the rest of this year.
And Cameron, finally, the ABC has written online today questioning whether Australia has or ever had a housing shortage. What are your thoughts on those comments?
I think housing, the shortage of housing or whether there's a surplus is really difficult to measure because we don't know who's occupying properties, who's not, how many people are living in each property. But what I would say is we've definitely seen demand from a rental perspective slow quite a bit over the last few years, and that would suggest that there has been sufficient supply. But if we look over the last 6 or 9 months, particularly in Sydney and Melbourne, we're starting to see rental rates increase again, and that's obviously on the back of just astronomical levels of population growth. So it's a hard thing to measure, but certainly there's been a lot of new supply over the last few years.
Cameron Kusher from CoreLogic, thank you.
Thanks.
And Kumi, that is the latest from the business desk for now.
Thanks so much, Rach. See you soon.